right. So let's look at the exam. And all right. Okay, can you guys see the practice exam? Today is also May 28th, and this is our test review for our exam tomorrow. Tomorrow's Wednesday. Even it's a little different because Monday was a holiday. And then we will be meeting tomorrow at 2:30 in C208. All right, so we've got a couple questions here. Test review question 6, how to calculate earnings per share. That's from Yelena. Ariana, I have a question about closing for retained earnings. The original balance was different than the balance listed on the entry. Is that not the balance we need to use? All right. Well, those were both good questions. So I'm going to do Yelena's first, number 6, because she was first. But in general, there's no multiple choice on my exams. You need to know how to do the chapter material, the chapter examples. Those are great to study off of. I like to encourage students to cover up the solution, see if you can get the solution, and then check your work. End of chapter has great practice problems with solutions, and of course, the practice homework. And then lots of journal entries. If you add these up, you have 14 from chapter 5 and appendix 5A, and 11 from chapter 4. So that's 25 journal entries. So just be really ready. Know how to calculate cost of goods sold using the periodic system. Know how to do a full multi-step income statement using perpetual. And then key ratios. And you will, your practice exam, I think, did I add any other instructions? With the ratios here, be able to analyze the trends. So if I give you 3 years of net income percent, be able to talk about the trends. And remember, when you write an essay, you talk about the numeric difference and the percent difference, except if it's a percent, because you don't do multiple percents. Okay. So, and let's go right to number 6, 1. And then we'll, after that, we'll do the closing journal entries. Okay. And you guys see the solutions now, right? So we're just kind of answering questions about why the solution was what it was. All right. So we're still working with the same income statement that we did with our last practice exam. And I gave you total revenue, and I gave you EPS, $1.88, $1.29 and 86 cents, gross margin 55.67, 56.89, and 55.49. Okay. So Yelena, I would ask that if it's provided, you don't have to calculate it. Okay. So EPS in this example is net income. The formula tells you what it is. It's net income minus preferred dividends, which we don't have on this statement, so we don't actually know what they are, divided by average shares outstanding. So I don't have a balance sheet here, so I can't prove that to you, but that's what the calculation is. So let's do this.
So we're not going to be calculating the EPS if it's going to be given to us.
Right. If it's going to be given, you don't have to count. So we would have to have, let's just bring up a quick spreadsheet. We'd have to have a balance sheet. And we'd also, and preferred dividends are not on the balance sheet. You'd also have to have additional information of the preferred dividends. Okay. Let's just do that. But you guys did this for homework. So to get EPS, you have to know, of course. And I love this ratio because it's kind of tells you what the ratio is. It means earnings, can't spell today, per share. And earnings is another word for net income. So it's going to be net income and per share is referring to common stock. In other words, what earnings is available to the common stock shareholder? All right. So we
Are
need
you,
to know
sorry,
preferred.
are you showing us a different screen? Because we're
I am
still
sorry.
stuck
Thank
on,
you. Just keep yelling at me and I'll get it. All right. I was. Okay, now can you see both screens?
yes.
Okay, thank you. All right. So you need to know preferred dividends, if any. Most companies do not have preferred stock, so therefore they do not have preferred dividends. Average shares of common stock outstanding. Okay. So you have to have that. Okay. This, and I'm gonna wrap that. All right. So the only thing here we know is net income. So here we would take 270,556. We'd need to know, subtract preferred dividends from that. We need to know. So how do we get average shares of common stock outstanding? Can you guys tell me? That's a calculation that you aren't usually given that. And in accounting, we only do averages in this case. When we say average inventory or average accounts receivable or average common stock outstanding, we only use 2 years of data. So we would go to 2 balance sheets and we would say, what is this year's number of shares outstanding? What is last year's number of shares outstanding? We'd add them together and divide by 2. And that's your average shares outstanding. Okay. So it would be this year plus last year divided by 2. Okay. So another way to look at it is, let's say you're 20 years old and let's say somebody else in the room is 30 years old. What is your average age? 20 plus 30 divided by 2. So that's what we're coming up with here with average shares outstanding, okay? And then the only real unknown is preferred dividends. So we would get net income from the income statement. We would calculate, this is a calc, it's not going to show up, average shares outstanding is not going to show up on any statement, but we'd have to go to a balance sheet for this year, and then, balance sheet has 2 columns, this year and last year. And then we do the calculation, okay? Preferred dividends, you can't find that anywhere. You're going to have to be told that. That actually is going to come off of the cash flow statement. We're not going to study that until accounting 202, okay? All right. Does that help, Elena?
Yes, it does.
Okay. So let's go back to the exam. So this is just given. So now I'm saying, look and discuss the trends. So if you were discussing 3 years of trends, I want you to give me numerical evidence and percent evidence. So now you're going to be giving me how much did it grow from 2011 to 2012 and 2012 to 2013. You're going to be subtracting these 2 numbers and getting the difference, subtracting these 2 numbers and getting the difference, and then you're going to calculate the growth rate by taking that difference and subtracting them by the old number. So let's remember those formulas. So numeric difference, that's just going to be this year minus last year. $1.29 minus 86. That's a 43-cent difference, but we want to know what kind of growth rate that is. And so the growth rate is where we take that this year minus last year and we divide it by last year. We're saying how much did it grow from last year? And in my Excel formula, it comes out like a decimal. So we want it to be a percent. And remember, when I ask for percents, I want 2 decimal places here, even if it's zeros, okay? So this is a 50% growth rate. That's massive, okay?
We can't see the,
Oh, why'd you shout out sooner?
sorry.
All right, now can you see? Got 'em.
Yes.
Okay, I need to do both on the same screen. I'm not using my usual screen now. Share. All right, can you guys see both screens?
Yeah.
Okay, so this is up here. This is the calculation that Yelena asked about for earnings per share. Okay, and now I'm saying and can you see the Lululemon data here?
Yes.
All right, so now I'm saying, let's look at these. I'm not asking you in this problem to calculate earnings per share. I'm saying, give me the trends, which will include numeric evidence and percentages. So the numeric evidence for each pair of numbers, $1.29 compared to 86, $1.88 compared to $1.29, okay? So we're doing the first set, the numeric difference here, and we're saying $1.29 minus 86 cents is a 43-cent growth. And then I'm saying, what's the growth rate? Well, that's that 43 cents divided by the old number. And growth rate is equal to this year minus last year divided by last year. And of course, we multiply by 100 to get that percent. Okay, and that's how I got this number. Okay, so let's take the second set of years. Okay, so we're going to do it. And then this year moves, right? And I'm just going to put in parentheses here. This year minus last year was 2012 versus 2011. Okay, so, and now we're doing 2013 versus 2012. Okay, so first thing I want to know is what's the difference? 188 minus 129. It was a 59% growth numerically. So that looks better than the previous year of 43. But now let's look at the growth rate, and we're going to compare it to $1.29. And what can you tell me about this? This growth rate is now so the growth rate in 2013 compared to 2012 is 45.74. The
Wait,
previous year,
can I ask a question just a second? Where are you getting the 0.59 from?
the 0.59 is the difference between $1.88 and $1.29.
Okay.
Okay. And then the growth rate is taking that 59 cents and dividing it by the previous year, which is $1.29. And that growth rate is 45.74. The previous year, it grew by 50%. This current year, it's grown by 45.74. Both phenomenal growth rates, but what can you say about it?
That the growth from 2011 to 2012 was slightly better than the growth from 2012 to 2013.
Correct. Yeah. And what I want you to do, Yelena, is the way we work it is we look at the present. So we're going to say the growth in 2013 was high at 45.74%, but not as high as the growth from 2011 to 2012.
Mhm.
We don't say 2011 was better. We start with the current year and give the news about the current year as compared to the prior year. They're still great growth rates, but you should acknowledge they're a little bit lower.
Okay.
Okay. All right. So now let's go to Ariana's question. Ariana,
And wanted to add that I also had the same question Ariana had,
perfect.
and she could correct me if it's number 2 on the example, maybe not.
Well, I made some
think
corrections
it
to
could
the
be.
exam, but it may not have gotten through to your copy. Okay, so retained earnings is 2,200 here. Okay, and then does the solution have a different number? That would be just a bummer, but what can you do? All right, let's take a look. Let's take a look.
I also noticed the same thing in problem 10, if that helps.
Oh,
But
good.
this should also
Let's
have the
take a
same
look.
information.
Let's take a look. Two. Right. All right. So is this what you guys see in the solution?
Yes.
Okay. So what is different? Help me out. What do you see that's solution had 300?
So in the entry to close the retained earnings, or I guess the description says to close income summary, but basically the balance for retained earnings is 300 instead of 2,200.
Okay. Let me get rid of some stuff here. All right. So let's, oh, I'm gonna do that. So do you agree with the first two journal entries?
Yes.
Closing all the expenses, closing the revenue accounts, closing the expense account. You guys good with those? And
Yes.
are you questioning the 300 in the third
Yes.
journal entry?
Mm-hmm.
Both of you?
Yes.
Okay. All right. We don't close retained earnings. So that is why it's a different number. So let's take a look here. Nope. Okay. So when you, let me go back to here. When you're, I'm gonna magnify this. Can you guys see the trial balance?
Yes.
Okay. So when we close all the accounts below retained earnings. All right. So we leave the balance sheet accounts, and that would be assets, liabilities, stockholders' equity, which includes common stock and retained earnings. But everything below retained earnings gets closed. So we start with the service revenue. And if you have more than one revenue account, you close both of them. And that's why you guys agreed with this one, right? You close revenue. And then we go back and we have to close 1, 2, 3 expense accounts. And I just want to caution you, if you see depreciation expense, be sure to close it.
But we're not closing unearned revenue because it's a liability balance sheet account, right?
Correct. Good. Yes. Good catch. Yeah. It's a liability. It means the customer prepaid us and we owe them the service, whatever it is, renting a golf course or whatever. Okay. So then here we close out those 3 expense accounts. If there were 10 expense accounts, we'd close them all. All right. So then I want to stop here and do a T account for income summary. So let's see if I can pull this off. All right. Let's see. Can you see 2 screens? Can you see the solution and Excel?
Yes.
Yay, it's a good day. Okay. I'm going to make it big so I can use all my, and then I'll be.
I have a clarifying question. So
Yeah, go
since
ahead.
we're not closing retained earnings, our focus is more on the income summary and how much it's debiting and crediting, and that's the balance we get when we're closing it.
So income summary is this kind of goofy account that we use so that we can actually create a journal entry that shows net income. Okay. So let's post our first journal entry here just to income summary. So here we have a credit to income summary. Can you see my little T account here?
Yep.
For income summary. So we're going to put that 4,300 on the credit side. And in this second journal entry, we debit income summary 4,000. And you can put it like that. Okay. And now we're just about done with income summary. So we're going to run a quick subtotal on income summary. Before we, let me just underline that. And so what's the balance in income summary right now?
$300
Debit or credit?
credit.
Good, 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 good. Okay. So the closing journal entries, number one, we close all the revenue accounts. Number two, we close revenue to income summary. Number two, we close all the expense accounts and we close them to income summary. Number three, we close income summary. So we have to get this 300 out of here. So we need to debit it. So if it were a debit balance, we would credit it, okay? So we're going to underline, we're going to close it with a debit, and you see that over here. We're debiting income summary and we're crediting retained earnings. So this third journal entry doesn't care what the beginning balance is in retained earnings. It is just closing the profit to retained earnings, or a loss if it were a loss, okay? Now, the final thing to close is dividends, and dividends had a $400 balance. Let's go back and look at that. Dividends has a $400 debit balance. So we're going to close that also. And we close dividends with a credit, and that's a debit to retained earnings. And so I'm showing those here. So the 2,200 is just the beginning balance in retained earnings. So the ending balance in retained earnings after these two journal entries is 2,100 credit.
Quick question, would you like us to include the ending balance of retained earnings?
Where? In your answer?
Either
Like
in
right
the
here?
last entry, yes.
No, if I want it, I will ask for it. And I don't believe I asked for it. I just was showing you the solution. So the solution just said, prepare the closing journal entries. So it didn't ask for a T account. I just put it there for reference so you could see how the numbers flow. So be real mindful of when you do this, be sure to put that beginning balance in if you are calculating the ending balance in retained earnings, okay?
Can you, sorry, I lost it. So the retained earnings, the beginning balance is crediting 2,200, and then we're also crediting the $300, which is from the third entry, we're getting that number from there. And where's the 400 coming from?
So all you're doing on this T account, Yelena, is you're posting what's up here on retained earnings. But like all T accounts, you have to put the beginning balance in first. And we got the beginning balance from the trial balance here, okay? So then we're saying, oh, nothing for retained earnings in entry one, nothing for retained earnings in entry two, but here we closed income summary. So there's our 300. The 400 is dividends. We close dividends directly to retained earnings.
Oh, okay.
Now this should feel a little bit familiar to you. So if I asked you, and I'm not going to ask you for this exam, to give me a statement of retained earnings, and we'll call it Yelena Company, and we'll call it today 12/31/24. What is the statement of retained earnings? Who can remember the 4 lines?
Beginning balance,
Okay. Plus
net income or loss.
or
Mi-
minus net loss. Yeah.
Less dividends,
And then what?
retained earnings.
Just calculate the ending balance. Okay. So that's what you're seeing here on the T account. Beginning balance, 2,200. Plus net income. Minus dividends. And then you add those up. And you get, did I have a wrong number? Is that what you guys are asking me about? No. No, it's a good number. Oh, good. Phew. Thought maybe I made a mistake. All right. So this should be familiar to you from chapter 2, I think. All we're doing with the closing entries is making it happen. Okay. And so these 4 closing entries make this happen. We reported on the statements, and then we've got to create the journal entries so that that ending balance retained earnings is actually what we see on the T account here. Okay. All right, we got another question. Caitlin, we'll see you later. Number 1, journal entry number 1. Okay. Are we good with this one with the closing entries?
Yes.
Okay. And it's just to give us kind of a clean slate. So let's look at entry number 1. So let's go to a new page. All right. So we have a selected trial balance, not even selected trial balance, just a selected list of accounts, okay? And it's your job to know whether it's a debit balance or a credit balance. So accounts receivable is at 0, accumulated depreciation should be credit, and so forth. So Lock Free borrowed 20,000, and you can see it's right there, 20,000, by signing a 12% one-year note on September 1st. Okay. And then the question that it asks you is, always read the question first. Prepare, which I did not do. Prepare adjusting entries for the 7 items as of December 31st. Do not book the original journal entry, because as you can see, the accounts already reflect that 20,000 note payable. Okay. So how do we calculate interest? We start with principal times interest rate times time. How long did they borrow the money? So Ariana, what's the principal in this example? How much did they borrow?
20,000.
So we'll put that in. Okay. And then
And the interest rate is 12%.
12%. And now it's just a question of time. And honestly, this is the hardest part. Okay. So September 1 through 30th is 1 month. October 1 through 31 is 2 months. November, the whole month, 3 months, and December, 4 months. Okay. So first, interest is always annual. So first, let's calculate the annual rate. So 20,000 times 12% is $2,400. And we only need it for 4 months. So we have to do something called prorating. So I'm going to write this down. So 2,400 would be what we'd pay for a whole year of interest. Okay, we only need 4/12 of interest. So we're going to take that 2,400. Let's do 2,400 divided by 12. It's $200 a month, and we've already just said it's 4 months. So the answer should be 800. Is that what they gave you?
Yes.
Yay. All right. Did you do 3 months?
I calculated 4 months more. My question was a little geared towards the account titles, because when I first read that it was a 1-year note, I immediately thought of note payable. So is it because it's an adjusted entry that we're using interest
Yeah.
payable?
So chapter 4, we're not booking the adjustment. Sorry, chapter 4, we're not booking the original entry. We're booking the adjustment. Chapter 3, we book the original entry. Chapter 4, we're booking the adjustments. So in real life, you're doing both all the time. So
And in this case, we can just select a different account since it's more applicable.
are you talking about the accounts we used for the 800?
Yes, the interest payable.
Yeah, so they're telling you Oh, are you worried because interest payable is on the list, interest expense is not on the list. So original entry would have been cash, note payable, right? But that would have been done already. We don't need to do it again. So now we're just saying, how much interest do we owe at the end of the year? And you want to remember all the adjusting entries, all of them have to have at least one income statement account and one balance sheet account. And they do not involve cash. Okay. So this is your adjusting entry. Okay. We don't care about the original entry because it's already made. I don't know why it's underlined, but that's just how it is. Okay. So we're going to say interest expense, 800 as of the end of the year. And so if we hadn't booked this entry, we would have understated our expenses. So we need to get this entry in. Okay. Do you guys have any last questions?
Are we gonna have a list of the accounts?
No,
Okay.
no. No, you're not. So let's see. You just have to remember them. So, and
Would you like us to write descriptions on our journal entries?
no, and please remind me to put that on the board tomorrow. I usually do, but I don't want anybody taking the time to do that tomorrow. So. All right, I will see you guys tomorrow then, and 2:30 in room C208.
Can I just ask one last question? It's a
Of
quick.
course,
Is it gonna be the length of the test about the same as it was last time?
correct.
Okay. Okay, thank you.
All right, guys, I will see you later. Thanks for coming. I appreciate it, and see you in class.
See you
Um,
tomorrow.
Thank you.
Just
Bye.
I
Yeah,
have one question.
sure, go ahead, Tom.
So I just wanted to check if I the test for the makeup exam confirmation was confirmed for my exam 2,
Check your grade. If it's not,
because
just come by a little bit early tomorrow and we'll just make sure that happens. We met though, right?
yeah, but I didn't get the email from the BC Proctor request yet,
Oh,
so I was
no.
just curious.
Oh, I'm sorry. I thought you were asking something else. I have not submitted your exams because nobody's put in to take the exam remotely. Let's see. Hang on, let me just check something here. Thank you for reminding me. You're not talking about a makeup exam. You're talking about taking the exam, right?
Yeah, in a different time. Wednesday, 1 p.m. like last exam 1.
Oh, you're right. You're absolutely right. I will do that right now. But if that doesn't work for them, can you do it on Thursday?
May I know what time it is?
Whatever you want. But let me try
Oh,
to
okay.
get this first. Yeah. So for
Okay.
the final, do me a favor, Tom, make a note for the final exam to remind me of this because this is an unusual situation.
For the final exam?
Yeah, send me an email a couple days before, like on Friday before. So